Hello traders and welcome to another video review. Today is Tuesday, November 7th, 2023. Let's find out what is going on the Forex economic calendar today. As you can see, we got some data overnight that were released from the Japan and China in form of the household spending, for example, and the export data from the China were published as well. This is very big disappointment. Exports were way below the expectations of minus 3.3% with the actual reading of minus 6.4. Imports are a little bit better. Big surprise here, 3% actual reading. Forecast was minus 4.8. RBA interest rate decision has been published overnight as well. The Reserve Bank of Australia has decided to hike the interest rate from 4.10% to 4.35% as expected. The RBA rate statement had been released as well, and during the London session we got the unemployment rate from Switzerland, Halifax price index from the UK, and German industrial production data scheduled for release, just released apparently here at 8 o'clock. The German industrial production is minus 1.4%, which is way below the forecast of minus 0.1%, so not too impressive data from the Germany. We got some remarks from the ECB official, the Guindos, coming at the 9:15. Then we got the mortgage rate data at noon from the UK, and then we got another remarks, another speech from the ECB, McCaul, scheduled for release at 1:15, and 1:30. There's FOMC member Kashkai who will give some kind of a remarks as well. Trade balance data from the US together with the import and exports are scheduled for release at 2:30, together with the trade balance data from Canada. Then still we have some data from the ECB, some remarks from Enria at 2:30 as well. Then we have a speech from Fed Wellers at 4 o'clock. Then we have the speech from Bank of Canada Deputy Governor Kozycki at 5 o'clock. And then of course we got the very nice set of data from the US in form of the short-term energy outlook. This data is the most important data of today, and it's scheduled for release at 6 o'clock together with the FOMC member Williams, who will give us a speech. There's some speech from German Buba, President Nagel at 8:30, and 2 hours later API weekly crude oil stock data are scheduled for release. So plenty of the data today. It looks like a busy day, but what we want to take a look at is the Reserve Bank of Australia interest rate decision and how exactly this played out on the market. So let's switch to the Australian dollar. So this is the Australian dollar 4-hour chart. As you can see, the reaction is very negative for the rate hike. So the Australian dollar is being sold across the board. The bulls managed to do the 5-wave movement to the upside. So if you can apply the Fibonacci impulsive wave from this bottom here, you can easily see that there is wave 1, wave 2, wave 3, wave possibly 4 somewhere there, and wave 5 here. So we got the impulsive cycle to the upside. We can label it as well. We can label this without any problems because it's kind of a textbook example. And then we have the very big movement to the downside. So what is the level? The top is at the 6,525. Then we got the technical resistance at 6,515, and then 6,504. This is one big let's say supply zone. Of course, yeah, I'm just playing with this there you go. So I want to put it on the screen. So if you want to take a look here, then you need to, there you go. So it's like a is like a blue, it should be red, so it's not a problem. Okay, so this is what I'm talking about, big supply zone. Okay, this supply zone has been established a long time ago, because this is from the end and the middle of the September. So if you are analyzing the charts on the 4-hour chart, that was a long time ago. We broke below the another technical support, 6,449, 6,459, 10 pip technical support was violated as well. This time it will act as the resistance again, and we are approaching I'm back with the magnet, 6,396, and another level which is located at 6,402. So of course this is the target for the bulls. One more thing we can apply on this chart, and that will be the last one, is of course the Fibonacci retracement tool. So if we got this end here and this high here, we can see that 38%, which is located here, has been just tested and broken. Now we are narrowing the lower towards 50% of the Fibonacci retracement of the last up wave, and this level is located exactly at 6,399 pips, so in between this technical support. The last resort for the bulls is located at 61% of the Fibonacci retracement at 6,370. Please notice there is still a room to the downside. There is still a room on the chart as well, so we might see lower levels on the Australian dollar very soon. There was some data from the Japanese market. Let's take a look at the US dollar to Japanese yen. As you remember, this was our trend line here, and it looks like the market bounced from this trend line. So if we would just manage to let's say move it a little bit higher here, so you can see that there is a very nice bounce from this line. The momentum is right now very strong, 60 points after the jump from the level of the 32 points. We broke above the technical resistance, intraday technical resistance, 149.89. all right, and we are heading towards the another technical resistance located at 150.59, and we are trading above the 50 and 100 periods moving average. So bulls are back in control of this market. However, last little thing should be basically let's say checked before we will say that bulls are in control. So how much did we retrace? So 50%, we are testing the 50% retracement level, 150.46, and the 61% of the retracement of the last big wave down is located just below the technical resistance. So that's why this zone here is now very important. It's a crucial one. So let me just make another rectangle here to reiterate that this is a crucial technical supply zone, of course, technical zone between those two levels, a little bit lower. There you go. So now we got the supply zone located just here together with the 61% of the Fibonacci retracement. So very interesting situation for the bears. So this zone here should be defended by market participants. I'm just watching the chart. I'm just wondering whether this might be some sort of the impulsive wave to the downside. Well, maybe there's there is like a reversed V shape let's say pattern made here, and now all of these candles, 4-hour candles, are green. Very interesting. So right now we are narrowing this level, and maybe there will be some kind of a reversal. Right, so because there is the energy outlook, let's take a look at the crude oil. This is 4-hour chart, but I think that, oh no, let's leave the 4-hour chart. Why we going lower? As a question that is very interesting to answer. However, as you can see, we have the potential target in place. The target is at 77.59, so this is the technical support. We can manage one more level here. We can manage the level of 78.15, and we can place it on the chart, and we could add a little bit more levels here because it looks like they are very much connected, like 78.19, yes, 78.69 apparently, right? But what do we see here is for now a free wave movement. Yeah, so if we take the Fibonacci, what we can see is the A, B, and possible C wave completing somewhere there. Moreover, what I see here is as well a possible, just possible, some sort of the wedge. Okay, some sort of the wedge is possible if we do it this way. For example, let me just take a look at this. Yeah, maybe not that that much of a wedge yet. Nevertheless, it still looks like the possibility of some sort of the champagne bottle, this kind of a pattern. Yeah, so what I'm talking about is maybe something like this to visualize it better. So if we're done with the wave C as a wedge, then of course we can bounce. A higher. Momentum is negative. Momentum is at the level of 38 points. So the sentiment is negative as well. Bears are in charge of the market of the crude oil, and there is still room to the downside towards the technical support. Room to the downside on the RSI. So we should see a test of this level soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.